to me, because crypto is such a nascent space, it can be affected by so many outside factors that are so much bigger. So whether that's Fed tightening or global liquidity or the housing market fears, like what do you think is the biggest factor that's sort of bringing crypto down?
So, great question. I mean, really important question. I think I would probably lean toward liquidity. Liquidity drives markets, and I've said that for forever, and it's really true. And particularly in digital space, particularly, take something like Bitcoin, right? 1 Bitcoin equals 1 Bitcoin, always will. And it eventually, we all hope, becomes a unit of account the way we think about value. But that's not what people talk about, right? They talk about Bitcoin in something else, in dollars, usually. That's the number most of us talk about. But if you're in Argentina, you're talking about it in pesos. And that's, making new highs lately because the peso's in the toilet. If you're in Argentina, you're talking about it in bolivars, or in Turkey, you're talking about it in lira, all of which are down. Those are down. And so Bitcoin in those currencies is up. But the rate of change of dollar growth has slowed. And therefore, you think about it, right before the pandemic, we were in that $14,000, $15,000 range. They doubled the money supply, so we should be kind of in the 28-ish range. And we're kind of in the 26 range, so it's kind of where we should be, if we think about it in Bitcoin per dollar. So in the absence of a lot of monetary stimulus, there's not a lot of translation change that's going to happen. So I think that's certainly part of it, and that leads to some malaise. Most of the stimulus in the economy is shifted to fiscal, right? Government's still spending like drunken sailor. Actually, I'm not sure a drunken sailor could spend nearly as well as our government. But they pumped $1 trillion into the economy to kind of give us this boost that we felt. Yet, if you ask people how they're feeling about the economy, people aren't jumping up and down, right? Everybody knows somebody who lost their job or got laid off. Spending, while other than Taylor Swift tickets, spending is kind of muted. I mean, it's not rambunctious. So I think macro is medium and maybe even leaning toward downward, as people think of, I retweeted something today. I'm still gonna call them tweets too. I'm not sure what else we would call them, but
reposts.
Reposts. Oh, it's a repost. Oh,
the most generic name ever.
Yeah. All right. Well, X post, repost. All right. So I retweeted something that basically said bankruptcies were soaring. And like, is bankruptcy a synonym for strength? I mean, if bankruptcies are hitting all-time highs, that's usually not a really good thing. There's bank challenges, traditional banking challenges with the losses in their fixed income books. Fixed income markets are on pace to have their second negative year, which I think would be the first time in history of 2 back-to-back negative years in fixed income. So that's troubling a little bit. So it's just a very interesting time to be an investor, that's for sure. Larry didn't call me.
Yeah. Once a Bitcoin ETF does get approved, spot Bitcoin ETF, is that game over in a sense? Like, that's mass adoption for Bitcoin. What else is there?
It's certainly mass adoption. So for sure. So, and let's just do math. So Eric Balchunas had this great post. Look, the the industry, the RIA industry, advisor industry controls about 30 trillion, 30 trillion. And let's say 0.1%, buy an ETF, a Bitcoin ETF. That's 30 billion. Well, 30 billion on 500 billion, that's not very much, but it's not 500 billion. Remember, it's probably 100-ish of the 500 that is the free float. So 30 on 100, that would move the price. Price would go up. But what if it's 1%? Forget 10 basis points. What if it's 1%? 300 on 100, then we get that that parabolic spike we had in the last run where we went from 10 to 50. And that could definitely happen. Now, all of this is in relation to fair value. So fair value today, somewhere around 50K. That's based on the Metcalfe's law curve. We're below that, obviously. So we should accrete toward that fair value between now and the halving next year. The halving potentially doubles the fair value, because if the price doesn't rise, then the miners go out of business. That's probably not going to happen. So what has happened in history is fair value rises, price rises, and we get slow accretion to that. So now we're talking, could that see a parabolic move from 25 to 100? Sure. And do you blow right through fair value and go to overvalue? Probably. What precipitates all of that? Adoption. And if 300 billion, which is only 1%, starts flowing in, now the converse of that is there's 20 billion in GBTC that if GBTC doesn't get approved, and let's say BlackRock does, is all of that 20 billion going to liquidate? Probably. Probably. If you're paying 2% and you can go pay, I don't even know what BlackRock's charging, but call it 50 basis points. Maybe it's less, but call it 50 basis points. You're definitely selling GBTC and you're buying the ETF. So if only 10 basis points comes in, we got 30 billion in, we got 20 billion going out. Oh my God, the price could actually stagnate or God forbid, go down in the short run, because people would freak out because there wasn't this big rally after the approval. I think that would be temporary, because even if all of GBTC liquidates, which it probably will, that's only 20 bills. Whereas I do think the adoption is going to be 1, maybe even 2%. Now we're talking 300 to 600 billion. That's a big move up. So mass adoption for sure. How fast?
For the average retail investor going into Q4, what's a bit of advice you would have for a crypto investor?
A couple things. One, just discipline. Just keep accumulating ownership of the most important networks the world has ever seen, right? So, to me, it's easy. Bitcoin's number one, Ethereum's number two, and then there's a handful of other networks that are, vying out to be provable parts of the ecosystem. The vast majority of the trading tokens, knock yourself out, right? Have fun, but have a certain amount of, like going to Vegas, right? Here's how much I'm willing to lose. You're probably going to lose it all. Occasionally you might make some, that's fine. But I would consistently acquire ownership in Bitcoin, Ethereum, and some of the guys at the guys and gals at the top. Now, so that's discipline. Just buy some this week, buy some next week, buy some the week after, the next month, and accumulate an ownership position. Don't do it all at once. I would also, and part of that is patience, right? Is don't do it all at once. Average in over time, and accumulate a position the same way you would with your 401k. Like every 2 weeks, your money goes in your 401k. You set it on autopilot, goes in the index. You don't look at it for 50 years. Good. Same thing for a portion of your, running money for digital assets. And the simple advice for all investors is 3 buckets. You got your liquidity bucket to fund your lifestyle. That has to be in cash or bonds or things that you can get to right away, or credit card that you spend 5 to 15% of your wealth to fund your lifestyle. Okay, good. Then you got the 10 to 15%, the get rich bucket. And I always say that's to do the friend's condo deal, the brother-in-law's, venture deal, the hot stock tip you got. You're going to lose it all, so keep it small. Most people are going to lose all of that because most people are just bad at trading, but it's fun, right? We all want to speculate. We all want to gamble. Knock yourself out. 10 to 15%. Don't make it a big piece. And occasionally some people will make some money there. And look, all great wealth, all of it, every single last dollar of it came from concentrated positions, not from diversification. All great wealth, concentrated stock ownership, business ownership, real estate, and some luck. And that's fine. So maybe you get lucky, maybe you don't, but 10 to 15. That's 70 to 80% in the middle. That's your stay rich bucket. And that gets filled up by your get rich bucket, and then it gets drained by your liquidity bucket. So that bucket needs to be stable. It needs to be broadly diversified. It needs to have the endowment model kind of investment. It's got to have stocks, it's got to have some bonds, it's got to have some private. Now, if you're young, you shouldn't have a lot of bonds, but it's got to have stocks and equity and real estate and commodities and venture capital and some digital assets. Broad diversification, keep accumulating, and drop some money into it every 2 weeks. So that's the singular advice. And as we come into this what I believe is going to be a positive halving for digital assets, the stuff you accumulate between now and the halving will probably serve you well.
Mark, I get some of the best perspective when you come on the channel. I definitely want to have you back on in a few months, get your updated take.
Awesome.
Where can my audience find you?
So easiest way is Twitter, at Mark Yusko, MarkYusko. We have a website, morgancreekcap.com. I'm all over Twitter in terms of doing stuff like this. So if you just Google me, you'll find some interesting stuff. But really appreciate the chance to come on and talk with y'all. And, the thing I love best about my job is I get to talk to smart young people. And you and your brother are just that. So I appreciate what you do for the community. And thanks for having me on the show.